Hello, traders. Gary Wagner here. Approximately 12:04 in Honolulu, 5:04 in New York on Tuesday, 14th day of December, 2021. And this is the daily report for gold and silver. It was reported today by the government that producer prices in the United States increased substantially, adding to the current pressure on inflation, taking it higher. That took gold lower as market participants anticipate an extremely hawkish Fed demeanor tomorrow. Included in tomorrow's statement will be a revised dot plot. The last dot plot released by the Federal Reserve was in September, and at that time they indicated only one rate hike in 2022. Market participants believe that that will change substantially tomorrow. We currently have gold down $16.90 at $1771.40. We did send out a trade alert right after the market opened in New York today to adjust your stops to raise them higher. We'll cover that in detail when we pull up some gold charts. Dollar strength definitely provided headwinds for gold, gaining about 0.25% and is currently fixed at 96.345. Lastly, silver lost about 1.7%, a decline of almost 38 cents, with the most active contract currently at $21.95. Traders, this morning we did send out a trade alert to raise our stops as our European component. Watch it trade to these lows here. The low actually came in at 66.10 and then moved back up. As it opened in New York, we did make the decision to raise our stops real tight. We are moving them to 1767, and that is this dashed line. This is the time that we put the actual alert out. The rationale is if the Fed comes in more hawkish than we had assumed, and it is not completely factored into the market, there's a likelihood it might be with today's sharp decline. I do not want to risk the market going to 52 and hitting our stop. So effectively, we have moved it. All traders should have raised their stop to 1767. Although this is an entirely news or headline-driven market, especially with the FOMC meeting concluding tomorrow, we still are looking at technical levels in which the market, if it holds, should hold. And we have this double harmonics. We have talked about this area right at 1771.50. Market is trading at 1771.40 currently. And that is both the 23% and the 61.8% Fibonacci retracement. They are of different data sets, with the longer of the two data sets beginning at 1918, this top here, and coming down to the flash crash. We are, of course, looking at a weekly chart. And then the shorter data set simply accounts for a leg of the rally that just occurred when gold went from 1757 to 1878. The fact that we have a harmonics or the same particular price point with two key Fibonacci numbers lends strength to that as an important level of support. As I said, we have moved our stops, and at this point, we're simply going to await to see what the Federal Reserve has to say tomorrow, in specifics, what their dot plot shows in terms of the number of rate hikes and when they plan to initiate liftoff. Those are the important factors that will move the market. The dollar certainly has been a factor putting bearish pressure on gold as we see the value of the dollar index continue to gain. When we take a look at action over the last week and a half, we can see that it has climbed from approximately a low of 95.50 to current pricing at 96.34. Lastly, a look at silver. Silver sold off sharply today. It actually traded to a low of 21.67 before recovering slightly, currently at 21.95. But you can see that the next real level of potential support, if silver continues to track lower, does not come in till $21 $1.44. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.